Welcome to The Explainer. You know, whenever you send money overseas, have you ever stopped to think about what actually happens? Today, we're going to pull back the curtain on the hidden mechanics of international finance. It's a system you use all the time, but you might not know what it's called. Let's get into it.
So you hit send, right? And like magic, a few days later, the money just shows up on the other side of the world. But here's the thing, it's not magic. It's a really clever system built on two core concepts with kind of weird names, Nostro and Vostro. So let's dive into the fascinating, invisible architecture that makes it all work.
Okay, so everything, and I mean everything, starts with these two simple but super powerful ideas. Now they sound a little old school, and that's because their names are Latin. But trust me, understanding them is the key to unlocking how billions of dollars zip around the globe every single day. So let's break down Nostro and Vostro.
And here's the wild part. These two terms are just two sides of the exact same coin. On the one hand, you've got Nostro, which is just Latin for ours. So from your local bank's perspective, it's our money that we have with you. That's an asset on their books. But then the foreign bank looks at that very same account and calls it Vostro, Latin for yours. For them, it's your money that you have with us, which to them is a liability. It's the same pot of money, just seen from two different points of view.
And all of this whole Nostro and Vostro thing, it all happens inside a system called correspondent banking. Just think of it like a global club for banks. Your local bank doesn't need to build a branch in, say, Japan just to send your money there. Nope. Instead, it just partners up with a correspondent bank that's already in Japan, and they use these special accounts to move the funds. It's what gives even a small local bank a massive global reach.
All right, so that's the theory. But what does this actually look like when real money is on the line? Let's follow a payment. We're going to trace a single transaction from India all the way to the US and see exactly how these accounts get to work.
So our story starts with a pretty standard business deal. We've got an importer in India who needs to pay their supplier in the United States $10,000. Simple enough, right? Well, the problem is the Indian bank has no branches in the US. So how do they get the money there?
Okay, so let's meet the cast of characters in this little drama. First up, the originator. That's our importer. Then, their local bank in India, the originating bank. The star of the show, really, is the correspondent bank in the US. This is the Indian bank's crucial partner. Then, you have the beneficiary bank, where the supplier has their account. And connecting them all is the SWIFT network. Think of it as the super secure messenger service that carries all the instructions back and forth.
And check this out, because this slide really breaks down the two different things that are happening at the same time. You've got the stuff in white, that's the information flowing, the messages, the instructions. Then you have the stuff in yellow, that's the actual money moving. And notice the sequence. An instruction gets sent first, then the correspondent bank moves the money from the Nostro account, then another message goes out, and finally the supplier sees the money in their account. It's this perfectly timed dance between information and value.
Okay, to make this super clear, let's throw some numbers in. Let's say our Indian bank, we'll call it Bank I, starts the day with a nice round $12,000 sitting in its US Nostro account. That account is held at their partner, Bank C.
So the importer clicks send. Bank I immediately fires off that SWIFT instruction we talked about. The second Bank C gets it, boom, they debit $10,000 from Bank I's Nostro account. Just like that, the amount of money the Indian bank has overseas goes down.
And there you have it, the final balance. After that 10 grand is forwarded on to the supplier's bank, Bank I is left with $2,000 in its Nostro account. Now here's the craziest part. The money never really crossed the border. It was just shuffled between accounts that were already inside the US banking system. Pretty clever, right?
So I keep mentioning these SWIFT instructions. And for a system this massive, we're talking thousands of banks, millions of transactions a day, to work without collapsing, everyone has to be speaking the exact same, super standardized language. And that language is SWIFT.
And this language has been evolving. This table really shows you the before and after. For decades, the whole world ran on what are called MT messages. You can think of them like old-school financial telegrams, super basic, not a lot of room for details. But now, the entire industry is switching over to this new, much richer standard called ISO 2022. The new MX messages are more like detailed emails. They can carry way more data, which is a huge deal for everything from fraud checks to tracking payments in real time. It's a massive upgrade for the whole system.
Okay, so this system is a workhorse, right? It's been the backbone of the global economy for decades. But it's definitely not perfect. There's a lot of friction built into these old rails, things that cause delays, add costs, and are just a general headache. Let's dig into some of those pain points.
Yeah, managing these accounts is a constant high-stakes balancing act. First off, there's liquidity. Banks literally have to park huge amounts of cash in these Nostro accounts just in case. That's capital that's just sitting there, not earning anything. Then there's compliance risk. I mean, you're basically trusting your partner bank's security systems to catch any funny business. And finally, reconciliation. You would not believe how often a simple typo can make a payment fail, kicking off this frantic manual hunt for the error across multiple time zones. It can be a real mess.
And you know what? All that friction, all those headaches, that's exactly what's pushing a huge wave of innovation. So the big question now is, how do you take this system, which is honestly centuries old, and rebuild it for the digital age?
And people are coming at this problem from all sides. On one hand, you have the big established players like Swift who are building better tools to try and automate and fix the system from the inside. Then you've got governments and central banks stepping in, creating totally new frameworks. A great example is India's system that lets them settle trades in their own currency, bypassing the US dollar completely. And of course, you have the disruptors, the fintech startups who are building brand new payment rails from scratch, promising to make everything faster, cheaper, and way more transparent.
And this quote right here, it just nails the core idea behind all this change. The whole game is about reducing the need for these long, complicated correspondence chains. If you can use technology to find a faster, cheaper route for the payment, you win. It's all about removing those middle steps because every step adds time and money.
And that really is the million-dollar question, isn't it? The world of Nostro and Vostro is at this massive turning point. Are these new technologies, things like blockchain or slick new payment rails, going to make this whole system obsolete? Or will they just make these old accounts smarter and more efficient? Honestly, the answer is probably a bit of both. We're likely heading towards a hybrid world, where brand new tech works with the tried-and-true system to move money around the globe faster and safer than ever before. Thanks for joining us on The Explainer.